Hello and welcome to Bazaar Morning Call, live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me my colleagues Sonia and Nigel. Guys, good morning.
Morning.
You know, every day nowadays you wake up and this Davos thing is going on.
Yeah.
Almost like some cold breeze is coming Mumbai's way, right?
I don't think anyone's listening to the conversations. The backdrop is so stunning, right? You can't take your eye off it.
So, I mean, the conversations have got to compete against the background, which is usually not the case.
Well, that's right. But lovely weather, right? You're in Mumbai.
Lovely weather. I mean, the best time of the year. I love it.
Much better than December as well. So I think
much better than Delhi. Also, Delhi is
I prefer this chill to Delhi and Davos because at least it's manageable.
I can't reach Davos, so I'm good with this Mumbai weather.
All right, so let's kick this off. So we're starting another session with decent kind of global cues, right? I'll get to the global cues, the global bit in a bit, because the big global cue is not what happened last night, but what is ahead of us in half an hour's time or maybe an hour's time, which is out of Japan. But I'll get to that. The Nifty yesterday finally closed above its 20-day moving average. So that's point number one. By the way, depending on how you draw the trend line, it's also closed above the falling trend line from the all-time high. And it's also closed above the recent swing high. But I think the 20-day moving average is a short-term reversal level, and we've managed a decent close above it. The next level to watch is the 40-day exponential moving average, which is very close by at about 18,116. So you got to get this sort of step-by-step 18,116, and then we'll talk about slightly larger numbers at about 18,250 or so, which coincides with retracements from all-time highs and other levels as well. But let's, as I said, get this on a day-on-day basis. The important thing is that, of course, I mean, if you're able to keep your head above the 20-day, that's great. But the recent swing low of 17,853 is held. And I think that is very, very important for the structure to remain, trying to buy the dips, that kind of impulse starting to come back once again. It's kind of disappeared a little bit, but it's there. So, I mean, the market holding some of these key levels will help that. The Bank Nifty also saw, some buying towards the end. The recovery in Bank Nifty was weaker as compared to the Nifty. It was up only about 0.25% or so. The 20-day for the Bank Nifty stands at 42,566. And that becomes the, I mean, if there is a recovery and there is a broad-based move, the 20-day at 42,566 is important. On the way down, 41,742, which is the recent swing low, I think that was the low on the 12th of January. That must be defended for things to stay on an even keel. Now, these levels we've been putting out, and we'll see we come to these or no, and these are important if you're trading short term. The big decision, and this is perhaps where the googly could come from, is the Bank of Japan decision in the next half an hour or the next 1 hour, as I said. And global markets are waiting for this very, very keenly. The big question is, will Bank of Japan end its super loose monetary policy? They are doing QE, which is buying up all the bonds they can get their hands on. They have a sort of a cap on how far high the yields, the benchmark government, Japanese government bonds can go up to. Will they abolish that? Now, if you go by a poll of economists on Bloomberg, and there are some 40-odd responses, more than 40, there is only one which expects the change and an abandonment of the ultra-loose policy. But if you look at what markets are pricing, markets are telling us something else, that maybe something is coming. The yen has appreciated sharply. You're seeing rumblings in the options pricing as well. So it's diametrically opposite to what the economists are saying. We'll find out in the next half an hour, but this is important. If this ultra-loose monetary policy is abandoned, I think the Japanese yen goes higher. It's already kind of come up quite a bit, but it goes even higher, and it puts pressure on most other currencies, emerging markets included. The Japanese yen has been a very important source of what describe as funding currency, because rates have been so low, and an abandonment of that is generally a risk-off thing for, global markets, for emerging markets, everything. As I said, we don't have to wait very long, but I think that is the big one, which we may be talking about potentially, for the bulk of the morning, if it were to come about. So that's a quick bit from me. As I said, the global cues, which are important, are not what happened overnight, but what is in front of us. Guys, hi, morning.
Hi, morning. Morning, Nigel. So, I'm getting a good feeling about the market now after what we've seen in the last few days, right? The big question I'm asking is, are the recession risks receding? Because you're seeing that in terms of not just the screen, but the internals as well. The SGX Nifty this morning is indicating that the start will be in the green. FIs have for the first time this year bought in the cash market, although you can attribute that to the Samvardhan block, which was about 770 crores. But nevertheless, the money has come in both from FIs and DIs, which is one positive. The Nifty is holding on to December lows quite, in a strong way. So that 17,770 mark is a good support for now. Yes, the global handover is a bit on the weaker side. So the Dow was down almost 400 points yesterday. There's an earnings miss that has come in from Goldman Sachs. But there's a lot of data awaited. So there's the US PPI and the retail sales data. Now, it's important to see that if there are any dips courtesy the global markets, do they get bought? Because despite the global handover being weak, the SGX Nifty is in the green. So the start could be up. Remember, there are a lot of individual stocks that are looking good. L&T was at a lifetime high yesterday. HUL is seeing buying ahead of its numbers tomorrow. But my square focus is on the technology stocks. And the question we're asking is the leadership shifting away from banks into tech names again? It may be too soon to tell, but look at the way the index is moving. HCL Tech, TCS, Infosys have all been up this month. Cyient is up over 10% this month. So lots to chat about. But I think the bigger question is that are the bulls sort of getting back to strengthen their grip on this market? It seems to be the case for now, but time will tell.
Well, it's going to be a bit of a test for the bulls, I think, today. Yesterday, we had a good session, but it was partly because of the weekly expiry that we have on the Nifty Financial Index. So that plays out on Tuesday. And yesterday, if you look at it, both the Nifty Financial Services Index, which is playing out the expiry, and the Nifty Bank, they had a good run, particularly in the last hour. That's what helped the Nifty conquer the 100 as well as the 20 DMA on a closing basis. The FIs, they chipped in with a buy number for around 200 crores. I view this positively. Even if you fully adjust for that Samvardhan Motherson deal, and you say it's fully attributed to that, yet that sell number would be much smaller than what we were seeing. Remember, just a few sessions ago, we were getting used to an FI sell number of around 1,500 to around 2,000 crores odd. So institutional numbers, did support. But how did we then gain, to such a large extent? Well, that's because short covering played out. On the Nifty, there was open interest lower. You had the Nifty Bank that recovered in the final hour of trade. And out there as well, there was some shedding out there. And that perfectly ties in what the FIs did. On index futures, they covered more than 10,000 short contracts. They added 5,000 longs. That's what takes this short positioning now down from around 64% to around 55%. On the index option side, well, the call writers, they were writing with gay abandon. Yesterday, they got stuck on the wrong side. There was shedding on the call side, and there was put writing that came back to play. Which brings us to the options data. The 18,000 put, the 18,000 put in yesterday's trading session was very, very active. 40 lakh shares getting added out there. That's giving you a sense. 17,950, that will be the stop loss for those writers. 17,800 put, mix of activity out there. But the call writers, they got taken to the cleaners yesterday. Just take a look at the shedding that we saw in yesterday's trading session. The 18,000 call, massive shedding out there. Moving to the levels then, well, for the Nifty, you'll want it not to revisit that 17,750, 17,800 odd mark. So the hope is maybe, in fact, we put that 100 DMA behind us, hold on to the 20 DMA and try to make a dash towards the 200 DMA. So let's see whether or not that happens today. On a closing basis, you'll at least like to end, above that 18,000 odd mark. The Nifty Bank, that's going to play a very, very vital role. It's around 300 points away from its 20 DMA. You're likely to get closer from a bullish perspective. SGX Nifty suggests a start in the green. I think at some point of time you'll get a dip and maybe in fact risk reward could favor a buy, provided we end above that 18,000 odd mark.
All right, Nigel, we'll keep an eye on those levels. Before we start, let me tell you what is lined up here in the first hour of the show today. We will get you updates from markets across the globe. Richard Harris of Port Shelter Investment Management will join us to discuss the global trade setup. Later, our research team will bring you CNBC-TV18's list of top 10 stocks for the day. And at around 8:30 this morning, we do a fundamental market analysis with Devin Choksi. Lots of stocks to discuss with him in a bit from now.
Okay, by the way, there are a lot of earnings that come out today as well. Interesting ones. There's Persistent Systems.